Hi, it's Romeo from Tax Accounting Adelaide. I'm just going to explain what you can claim with your car when you're working or in business. So let's just start with what you can claim. So some people may not know, but if you are travelling in between two workplaces, like having two jobs, or between two branches of the same job, or headquarters, for instance, you can claim those kilometres there. You can also claim from your normal workplace to an alternative workplace, like a client. So if you're doing going out to job sites, you can claim those as well. If your home was a base of employment, you start your work at home and then travel to a workplace to continue. You can also claim that leg of the work. So, and you can also claim between shifting places of employment. So if you regularly work at more than one site each day before returning home, you can claim those as well. And if you work in an alternate workplace, you can also claim that as well. And of course the main one is also if you carry bulky items or equipment that you need to use for work and can't leave them at your workplace. For example, tension ladder or a big musical instrument. Now, the ATO may ask your employer to prove that you actually need to use those for your work. So, yeah, that's just a common thing they may do. But if your employer is willing to vouch that can be fine. When you can't claim your car, so obviously just driving to and from work and the car parking fees of that you can't claim. You can't claim if you're saying you're doing some minor things after work on the way home, for example pick up mail, or if you go to your workplace more than once in a day, you can't claim that as well. You can't also claim if you're on call, if that's just still your normal place of work. You can't claim if there's no public transport near your work. Also, if you do a drive to your workplace outside normal business hours, like shift work or overtime, and your home was a place where you ran your business and you directly travel to your normal place of work as well. And or if you just do some work at home, you can't claim that as well. Okay, so moving on, there's two main ways you can actually claim car expenses, and these are in fact the only two methods left from the 1st of July 2015. The first one is the cents per kilometre method. Now, with the cents per kilometre method, your claim is based on a set rate for each business or work-related kilometre, and that rate is based on the size of your engine. So depending on whether you've got a big or small car engine, you can claim a maximum of 5,000 kilometres. You don't need written evidence, but you do need to be able to show how you worked out your business or work-related kilometres. For example, producing daily records or a diary record. What I suggest to people is they keep a pad in their glove box and just write down all their kilometres that they may have done in work-related or business. So whether they've gone to a training site or doing some business like administrative things, or going to training centres or travelling to the other work site, they just simply have that on their pad and put their date that was travelled on, the purpose of the trip, say to other branch, and the amount of kilometres they've done, and adding those up at the year. You can give those to your accountant and put those in your tax return. Just recapping, you don't need to keep fuel and other car running expenses receipts and tax invoices using the cents per kilometre method. You mainly just need to have your travel diary. So I've seen the tax office ask for people, particularly when they've claimed the full 5,000 kilometres, I've seen them ask as a way of a small audit for them to prove or show their travelling diary how they've done their kilometres or why they're doing their kilometres exactly. Now, don't forget, if you are claiming that the cents per kilometre method, it is a generous rate per kilometre. Again, depending on the size of your car engine, you do not additionally claim fuel and other running costs. So once you claim say you've done 2,000 kilometres, you times that by the rate, and you just claim that. You don't additionally also claim some other fuel and whether other receipts. It doesn't work that way. So it's just a purely cents per kilometre claim and no other claim of other receipts. Okay, and the other main method is the logbook method. So if you are claiming the full 5,000 kilometres and you've got a larger engine, you'll probably be claiming up to 3,800. So if you are spending a lot more than that in work-related travel or business-related travel, say you're well and truly spending more than $4,000, then you may want to consider doing the logbook method. Now, the logbook method, your claim is based on the business or work-related use percentage of your car. Now, you can claim all running expenses, including the depreciation or decline in value of your car. And in the way you need to work out your business or work-related business percentage of your car is you need to do a logbook for 3 months. And you need to have the odometer readings over the logbook period. I'm just going to give you a little quick example. Let's say you start your odometer reading at the start of the 3 months and it says 11,000. So you then need the odometer read at the end of the 3 months. Let's say that was 21,000. So let's say you've done a total of 10,000 kilometres. You must then also write in your logbook each work-related or business trip in your logbook. And you should then have a total of work-related or business kilometres. So let's say you wrote in your logbook over the full 3 months all your total work-related or business-related kilometres. And let's say they came to 7,000. Now your total work-related or business kilometres of 7,000 divided by your total kilometres, which was 10,000, will give you your work-related or business percentage use of the car, which in this case would be 70%. So you can then claim your fuel and oil costs based on your actual receipts, and you can also claim all the other running costs and decline in value costs, so your depreciation on the car of 7%, interest on the car of 70%, insurance, registration, of course, any mechanic or maintenance, new tyres, etc., and of course fuel. Now when you do this, obviously it's a lot more difficult to do because you do need to keep the logbook, but you only need to do the logbook once for 3 months every 5 years. And but you also need to keep all your fuel and all your running costs of the car. So you need more records compared to the cents per kilometre method. I think you just need to have a pad in the car and write down your log of your work-related or business-related kilometres. So there you have it. Hopefully that helps you explain the importance of the two different methods and how if you think you're spending more than about 4,000, you probably want to consider doing the logbook method. We can give you an electronic copy of a logbook as well when you're a firm, a client of our firm. But if you of course need any hassle-free way to maximise your car travel claims with an appointment, you can call us on 8337 4460, or you can come to our website at taxaccountingadelaide.com and book in your time. Thanks for listening to me. I'm Romeo from Tax Accounting Adelaide.